It's easy to get caught up in the AI supercycle and assume every chip stock is a buy. Today, we are taking a more disciplined approach and putting Micron under the microscope. My name is Ivan and welcome to Magnet Trade. Today, we are breaking Micron down into 5 key areas: the sector, the raw financials, the leadership team, their competitive moat, and finally the technicals and margin of safety. Let's get into it. Micron is in the semiconductor sector. This sector is the most buzzing currently and projected to grow even further and faster due to the AI supercycle. But Micron isn't the leader in this sector. In DRAM, Samsung holds approximately 38%, SK Hynix 29% and Micron 22%. In HBM, the leader is SK Hynix with 58%. Samsung and Micron control approximately the same share, that is 21%. And it might sound like Micron is losing this rivalry, but it's the only company out of the 3 located in the US. The other 2 are in South Korea. The best AI and technology companies like Nvidia and AMD are located in the US, and they are the main buyers of the product. Additionally, the US government promotes domestic manufacturers. If we take into account all these factors, Micron emerges not as the last out of competitors, but as government favored and already successful. On top of all that, the most recent advance in HBM4 was a win for Micron, and they are working on even more advanced HBM4 that could transmit data at a speed of 11 gigabits per second. On the macro picture, we need only interest rates, and they are still sitting at 3.5 to 3.75%. For Micron, possible growth in interest rates isn't scary in the short term, because their short-term debt is minimal, and they have no long-term payment due in the next 2 years. However, year 4 and beyond have a cumulative sum of more than $10 billion of debt, which might sound like a lot, but in my opinion, isn't, due to the continued growth of Micron and higher demand for semiconductors in future years. Economic cycle indicators like the yield curve and PMI show that we are in an expansion period and not on the edge of a recession, though it might change rapidly. Starting with the income statement, gross profit is above 40% of total revenue, which is good. CGA is around 30%, which is perfect for the semiconductor industry. R&D isn't extremely high as well. That is a nice point. Depreciation and amortization are high, and I will tell you more about it later. Interest expenses are low, so we may continue. Net income out of total revenue is around 21%, which is good. A slight problem here is that the values are not stable. We see there are periods of decline and appreciation, and it's mainly because the industry is extremely cyclical. On the balance sheet, we immediately see high cash together with high inventories and receivables. Generally, nothing special here. Let's take a look at property, plant and equipment, which take more than 50% of total assets, which is extremely high. And that's when amortization gets reasonable, and it actually has a lot of tight problems. Maintenance of factories is static. You have to pay for them constantly, and if you don't earn enough, you simply have to take on debt. And we've discussed debt previously. Here you can look at the numbers. Now, if we take a look at treasury stock, we see that there were almost no buybacks in recent years. It means that all the money earned, if there is any, is retained. Let's look at some ratios. Return on assets sits at 10.3% and return on equity at 15.8%. These values are low-key weak. Total liabilities to equity plus treasury stock added back equals 0.46, which is nice. On the cash flow statement, we see capital expenditures almost twice net income. On the one hand, it's vital because a company spends a lot of money on building new factories, buying new equipment, etc. On the other hand, when it's that big, it means they need extreme amounts of money to keep up with their rivals. Last but not least, free cash flow has an unstable trend, mainly, as noted earlier, due to the industry's cyclical nature. To conclude the statement analysis, I would say some parts of it are great, some are troubling, but the projections are nice. And for a final answer, we have to dig deeper. Let's take a quick look at management for a better understanding of the company. Micron's top management team isn't as public as Jensen Huang or Tim Cook. It's reasonable because the company works in a B2B model and doesn't have to promote itself on social media. Now, all of the people I'm going to talk about are well known among fellow businessmen. CEO has been Sanjay Mehrotra since 2017, who is one of the founders and has been the CEO of SanDisk for 28 years, which most of us have used. They produce SSDs, memory cards, and USB flash drives. The detail I want to point out is that unlike most CEOs, he isn't an economist or just a manager. He's a dedicated tech scientist. On his record, there are more than 70 patents, and some of them were vital for the memory industry. Overall, he has more than 40 years in the sector, starting with engineer positions at Intel and further proceeding to become one of the best CEOs of the industry. Mark Murphy is the CFO at Micron. He has more than 25 years in finance in companies deeply tied to technologies and chips, like Qorvo. Therefore, he has deep-level knowledge of how to handle money connected to factories, materials, etc. Scott DeBoer is the CTPO responsible for all R&D and other technical work. He's a real veteran at Micron. He has joined in 1995, more than 30 years ago, as an ordinary engineer and worked his way up to CTPO. All three of them have specific knowledge linked to the tech world, and this is the main criterion in the semiconductor world. Don't understand the technological side, and you're out. From a technical point of view, Micron has no competitive moat, because the competition among Micron, Samsung, and SK Hynix is extremely high, and they operate almost on the same level. Though there are still some points I would love to mention. First and foremost, Micron holds leadership in cutting-edge process nodes. Back in 2022, Micron achieved a level of DRAM and process nodes one generation ahead of their competitors. They used new DUV or deep ultraviolet technology to produce one beta process nodes, and to this day they have perfected it. As an example, they provided advanced D1 beta DRAM for iPhone 15 Pro and Pro Max, when SK Hynix and Samsung couldn't provide the needed stability yet. Currently, a new generation is emerging, EUV or extreme ultraviolet, and Micron is the leader yet again. They were the first to begin testing, and the node delivers a 15% increase in speed and a 20% reduction in power consumption, setting new records for data transfers. Secondly, Micron has proved in tests that its memory, specifically HBM3E, consumes 30% less power than Samsung or SK Hynix alternatives. In the AI world, this is a lot, and for companies like Nvidia, it makes a difference and motivates them to buy their product. Last but not least, as the only US-based semiconductor company out of the three leaders, they get all the advantages of the US market, legislative support, and a much higher investment than their competitors. However, there are some downsides as well. To begin with, the semiconductor market is highly specific. It trades almost like a commodity. If demand is high, any fast increase in supply will drive prices down. And the biggest problem is, as discussed earlier, the extremely high value of factories, makes them not only expensive to maintain, but even unprofitable in tough periods. The AI supercycle rally deceives us really hard. It will be challenging to decide upon an entry point. For technical analysis, I usually use Bollinger Bands, MACD, support and resistance levels, and moving averages. In this case, however, both Bollinger Bands and MACD are not effective, because prices reached new maximums, and the amount of data isn't enough to satisfy needs. So, this time let's specifically focus on volume and moving averages. On the fixed range volume profile, we see that the highest volume was in the $350 to $770 range, and the lowest volume in the 550 to 620 range, or as they call it in smart money terms, a fair value gap. It also lines up with the 200-day moving average. So, in my opinion, this is the most beautiful area to look for a potential entry. Price to free cash flow fluctuates around 40, which is okay, but still higher than for Samsung and around the same for SK Hynix. Price to earnings is around 16 for all three rivals, which is nice. Overall, I don't like the high volatility around Micron's stock, but if you wanted, you could find a nice entry point. After a thorough analysis, we can see that some points for Micron are attractive and some are troubling. Cyclical, capital-intensive companies like this can sometimes deliver great results in the long run, but that same cyclicity is exactly what makes Micron's position after the AI supercycle so hard to predict. If the problems they currently have are fixed, then Micron is a great investment. If the uncertainties continue, you should stay away from it. And remember to look at the price. Any great company can be bought at the peak of a bull market and bring only losses for you. If you enjoyed this analysis, like and subscribe. We have a lot more companies to check. Share your thoughts on Micron in the comments below. And I'll see you in the next one. Peace.